Alright, what's going on everyone? It's Yami here, and I got 6 stocks for you today just to keep an eye out for. I'll tell you my strategy going into it, but first I want to go into the stocks that I covered last week. So let's get into it here. So last week, again, I covered Tattooed Chef here. Again, since when I've called it out, ride that line out perfectly. If you want to see that last video, hit that card up there. But here you can see I hit that ascending line pattern. And since then, it has been on an uptrend. So it is working out perfectly. Again, I have very little allocation. My plan here is to keep it here just to make sure that it rides above this moving average 50 line here. And then when it does clearly go above it, I'm going to buy in again with the allocation, and then again above this 200 moving average. And then I will ride that out completely until it hits right around $22, $24. Really just depends on how the stock is doing, but that is the plan on paper. Again, well, last time I did Matterport and it is going perfectly as well. Again, what I said, make sure you see the drop, buy that allocation, or sorry, do the small allocation here and then ride it until it goes above the moving averages. And then again, if it continues to rise up, buy in and get out around those previous resistance. Again, you can do it around $20. You can do it if it keeps going, you can do it around $22. Take profits when you can. But just to know that those two are going great. The last one was Corsair. That one's not going super great. It still fell just a little bit, about 50 cents from last time I saw it, since last video. But again, this one is my very long-term trade, so it's just very little allocation over and over and over again until it finally hits that uptrend. So again, you can watch that one, but that's very long-term. The other ones are very short-term, right around a month, maybe 2 months at most. Great. Okay, so let's get into the other ones here. So the first one I want to start with is Pinterest. This one, very interesting. So this one, PayPal was rumored that it was going to buy Pinterest for $45 billion. A weird purchase in my opinion. I don't know why they would do that. Maybe, I mean, they have their own reasons, but personally I don't see it. But anyway, since off that news, it rose up, skyrocketed, and since then it has been very much down. This is an interesting buying opportunity though. Pinterest overall has been kind of on a downtrend, you can see here, but it is kind of interesting. It is oversold here, you can see by the MACD and the RSI. So maybe, you know, if you ride this back up to the moving averages, what that would be is, you know, right around 17% if it recovers fully there. If it recovers back to previous resistance, I mean, that's 38% there. Not only that, if it gets up to previous highs, I mean, we're talking 80%, 90%. I mean, that's pretty amazing. Again, it has a lot to do until it gets there, so just to keep an eye out. I wouldn't buy into this just yet. I would wait until tomorrow or the next day just to see what this is doing. But again, these are just stocks to keep on your radar. Awesome. So Pinterest. This next one, a little bit speculative, but this one is Robinhood. It's no secret here that since IPO, it has skyrocketed up, and since like most IPOs, it has been on a downtrend since. Robinhood reported earnings not too recently, and it dropped very dramatically. And so since then, it has hit lows of $34, and it's recovered a little bit since then, but I think it's going to consolidate around here for a little bit. I just keep this on the list just to keep an eye out for it, because yes, it could recover back to that moving average, just like Pinterest. And then again, that's still around 15, 17%. Still pretty good, but I would just keep an eye on it. I'm not invested into this yet, nor would I even allocate anything to it quite yet. I would just keep an eye on it for the next few days and see how it goes. That's Robinhood. The next one is very similar to Pinterest here, is Snapchat. So Snapchat, again, news came out and it has dropped like a rock. Again, it's almost the same exact thing as Pinterest. It keeps going down. Just keep an eye on it. Same exact deal. If it does recover, I mean, we're talking 21% for the 50 moving average, but if it goes up to the 200, we're talking 35%. I mean, that's pretty great. These are definitely discounted stocks right now. I just don't know what's going to happen in the near future, so I'm not going into it quite yet, but just something to keep on your radar. Awesome. Twitter, same exact deal, actually. I'm glad I'm doing these in order because these are basically the same exact thing. Twitter earnings came out. It went terribly, but it's Twitter, so it's going to be fine in the long run. And again, super discounted stock. Look at the day chart. Like, it hasn't been here in a while. It's been, a few months ago, actually, almost half a year ago, it was at this level. And so you could ride that dip out and kind of see how it goes. If it recovers, again, we're talking right around 16%. So all these stocks are right around 15 to 20% recovery. Again, I am not in any of these currently. It's just something to look out for, to keep on your watch list and see how they are in the coming days. If it shows signs of uptrends for any of these, by the way, if it shows signs of uptrends, I will allocate 5%, 10%, that kind of thing, very little, and ride this back up to recovery. Doesn't have to do that. It can keep going down. Again, just do your own due diligence. Make sure you keep an eye on it and don't go into anything that you have no idea about. Great. So that is Twitter here. Upwork, a little bit more interesting. So this one, earnings came out as well. Didn't go so well. But what's interesting about this one is that if I go to the day chart, you can see here, I mean, it's not trying to trick you, right? It has been around these bars, for what, a year now? Yeah, close to a year. It's been hanging around $40 and then up to around $60, which is amazing returns. So if you rode this last wave out, that is 50% we're talking. I mean, that's pretty great. So if you follow that pattern, what's going to happen with these earnings is it can continue going down. I think it could bounce around this 200 moving average line and then return back to that $60. But again, I'm not into it quite yet. I'm just going to see what's going to happen in the next few days. Maybe it keeps going down to right around 44 previous resistance, or go all the way down to that hard resistance at $40. I know in my ideal situation, it hits that 40, goes back. That'd be amazing returns. Doesn't have to do that though. Definitely doesn't have to do that. So just keep an eye on it. What's important to note is that after the last 3 earnings, so the last 3 quarters, it's been doing the same exact thing. So earnings came out, it drops, and then it slowly recovers back. Earnings came out, drops, slowly recovers back. Earnings came out, drops, slowly recovers back. So there's no reason to believe that this is any different. I think it's just going to drop and then slowly recover back. What's weird is with these earnings that it was super well, or it went super well. It beat out on most things, and their revenue is projected to be amazing. So personally, I don't understand why it keeps dropping every earnings, but that's the way the stock goes. So just keep an eye out for this one. Again, if it hits that 44, I think that is a solid starting allocation. And then if it keeps going down to 40, that is a very hard support. And then if it breaks below that, I mean, set a stop loss, because I think it's going to go real low, but I just don't see that happening. Again, this company is doing great. It's just the stock price isn't really reflecting that. So that is, a perfect formula for buying in to the dip to this nice discounted stock. Again, this has great return potential. If it gets down to that 44, it's 35%. But if you just write it out here and it does bounce and goes back up, that's still 23%. And I don't see this going any longer than, a couple weeks of recovery. So, I mean, that's pretty great returns and very easy trade, very safe. I mean, look at this thing. Like, it's a perfect pattern. Awesome. The last one here is Wayfair. Same exact deal as Upwork, actually. Same thing. It has been bouncing around these 2 brackets, which is right around 238, I believe, and 314. So it's been just bouncing around here, and luckily we are now at that bottom bracket. Now I was waiting for this because it dipped below, so I was a little bit worried. So I was just been watching it, and it went high, and now it's going low, and now it's going high again. I'm just dancing around this. I think this is a perfect time to start. I'm going to put about 10% allocation into this, and then slowly ride it up. What my plan on paper, ideally, would be to allocate here. And then again, once it breaks above that 50 moving average, I go in again, break above that 200 again, and then sell right around 314. Just because, again, this pattern is so easy to see. Like, look, this thing's not trying to trick you. I mean, it's been doing this for over a year, just going up and down, 238 to 314. I don't see any reason that it has to, break that pattern. It's a great company, and if it breaks below, set a stop loss. If it doesn't, which I really don't see it doing, just make sure you allocate correctly and get out, take profits when you can. And that's really it. Quickly, some people asked about Tesla, on like what's going on with it. Is this something that you should get into? I mean, it's just been on a moon rise right here, just been skyrocketing. Is it too late? Personally, there's 2 ways to look at it. So there is the, swing trade investor look at it. So obviously this thing is so overbought. Like everything is telling you that is overbought. The RSI, it is way above the moving averages. It's not slowly and methodically going up. And so that's kind of what you have to realize, that I think it's overbought. Now, if you're going into it that it is a value stock, like a growth stock, then if you get into it at any point, it doesn't matter. Dollar cost average your way in, and then but you're going to keep it for a year, 2 years, 5 years, 10 years. It doesn't matter. Like, this thing is going to raise above 1,077 where it's at currently. So I wouldn't worry about the price too much at that point. But if you're looking at a swing trade, if you want to get in and out of this to make a profit, I personally wouldn't go into this. Yes, this thing could keep rising, break above that previous resistance there, and keep going up to 1,100, 1,200, 1,300, 2,000. It doesn't matter. Currently, I just don't see that. I mean, what happens is usually after these meteoric rises is that it goes down really quickly. I think I can show you, in fact, yeah, something like this. So like it rises up and then just slowly, or not slowly, sorry, quickly just goes back down to normalcy. Same thing happens. Tesla just does this. I mean, it's kind of a momentum based stock. It's funny because it is a value company and they do, electric vehicles. So it's an amazing company in that regard, but it just has so much financial charge to it that investors go into it very, very hard. So I would just keep that in mind when you're investing in this. Don't get FOMO. There will be always another opportunity to invest in this. And so I would wait until this comes back down to the moving averages and then slowly build your position there if you're not in it already. If you're in it currently, I would take profits as soon as you can, honestly. I mean, even just take half of it out, that kind of thing. Just take a little bit of profit because it is so high right now and it is just due for a pullback. So don't be surprised if it does pull back down to like 950, that kind of thing, and then you can start a position back again. But again, Tesla, I wouldn't invest in this. If you're doing it for a value stock or a growth stock and you're going to hold this for years to come, keep investing, right? It doesn't matter. Just keep going. And then it's going to go above this, eventually. I just don't see it happening right now. And I think this is too steep of a rise to continue and continue and continue all the way up to like 2000. I just don't see that happening. So yeah. I think that is all of them. Did I miss one? That is it. So that's all the stocks I have for you today. Let me switch here. So that's all of them today. Leave a like, subscribe to me if you like these type of videos. Maybe I'll keep posting these. I was thinking 2 to 3 times a week, but maybe just every day that I'm not busy. And when the market is over, I can post videos like these just so you can see stocks that I'm looking at and we can go that way. So yeah, please leave a like and have a wonderful day. And remember, above all else, everyone, stay frugal.